How to use the Relative Strength Index, RSI, to determine market trends in cryptocurrency futures trading. Relative Strength Index RSI analysis is a commonly used technical analysis tool in cryptocurrency futures trading to help identify market trends. The RSI is a momentum oscillator that measures the speed and change of price movements. It is calculated based on the average gains and losses of a particular asset over a specified period of time, typically 14 days. The RSI ranges from 0 to 100, with readings above 70 indicating an overbought condition and readings below 30 indicating an oversold condition. When the RSI value is above 70, it suggests that the asset is likely to experience a price correction, while a value below 30 suggests that the asset is oversold and may experience a price increase in the near future. Traders can use the RSI in a number of ways to determine market trends. For example, when the RSI crosses above 50, it indicates that the market is gaining momentum and the trend is likely to continue upwards. Conversely, when the RSI crosses below 50, it suggests that the market is losing momentum and the trend is likely to continue downwards. Traders can also use the RSI in conjunction with other technical indicators, such as moving averages, to confirm or validate market trends. By identifying trends and potential reversals, traders can make more informed trading decisions and minimize potential losses. However, it is important to note that the RSI is not a foolproof tool and should be used in conjunction with other market analysis methods for best results.